So today we were going to talk about asset classes. What is an asset class, Doug?
Well, there's different types of asset classes, like there's equities or stocks, and both small, mid, large stocks. There's international stocks, there's commodities, there's
Bonds.
fixed income. Currencies would be another asset class. There's different categories, I guess you could say.
So how do we use those different categories to construct a portfolio?
Well, in our case, we use the DALI, which is Dynamic Asset Leveling tool, and it kind of shows which asset classes are doing best, and then we'll concentrate. We use a more tactical approach, so we'll be heavier in what's moving now because we're able to see that. Most other firms use more of a strategic allocation, so they kind of set you up and keep it the same. But basically, when you build a portfolio, you draw from all the different asset classes because each asset class has a different kind of movement characteristic, I'd say.
Do we use some sort of formula, like a percentage of?
We can and have. In the strategic one, absolutely. You'll say that 40% should be in large cap stocks and 20% small cap stocks. But in our case, what we normally do is look at, again, what's moving based on the DALI, and then we'll be much heavier. So, for example, after this last March, we were up around 80% in large cap stocks because that was moving, and then we had only like 5 or 10% in international stocks because that wasn't doing as well, and we had almost nothing in fixed income because that was definitely not doing anything.
So it seems like what you're saying is that over time you could be in very different asset classes as things change.
Yeah, with our tactical allocation, you'll see it actually move around. And we can actually show in history that there's periods where, for example, earlier in the year we didn't want to have very much international. Now it's our second largest holdings. So we're actually moving clients into a lot of emerging markets because that's really what's moving. We're actually seeing movements away from large cap into small and mid cap stocks.
Which is a big contrast from when you started out in the business, right?
Well, yeah, when I started out in the business, it was right after 1987, and no one wanted to hear a call about a stock. So, and they weren't doing real well anyway. So I built my business on calling on Pennsylvania tax-free municipal bonds.
So do you have any clients in municipal bonds these days?
We do, but mainly they're holding on to their existing bonds. We're not adding into them right now, mainly because they're tied to interest rates. And if interest rates move up, you could see, 1% increase in interest rates, you could see a 20% loss in your principal. So that's not going to work real well. So when I started in the business, interest rates were at near all-time highs. Now they're near all-time lows. So the market's flipped on us.
And do other firms use the DALI to inform their asset allocation strategy?
Only a very small amount. The most common use is the strategic method. I call it like the pie chart. And basically you answer questions and they determine your risk level. And then based on where you fall, they plug you into a pie chart. And so you're going to be, say if it says 30% in large cap stocks, you're always 30% in large cap stocks. It never changes no matter what's happening in the economy or what's happening in the world affairs. In our area, we're much more active. So we're always looking at the accounts. We're always changing them based on what's moving right now, based on what the DALI is telling us.
So that's a little bit about asset classes, an intro, if you will. If you'd like to learn more about our investment strategies, as always, please give us a call.
Thank you.
Yeah, I was like, where's my Freddie sign off?
Yeah.
We'll see you next time.
Yeah.